financial goal.
You want more money? Turn what you know into dough. Start hanging out with the people who have it. You create wealth on your own terms. It is not only your rights, but your duty to build wealth.
You are fiscally fabulous,
And it's time to enjoy your legacy.
You're listening to Fiscally Fabulous with Dr. Teresa R. Martin, Esquire, a podcast that aims to provide you with the tools, guidance, and encouragement you need to build your wealth, enjoy your wealth, and leave a lasting legacy. Dr. Martin is an accomplished attorney, speaker, business consultant, and real estate strategist, an all-around self-made success who provides highly sought-after expert consulting in the creation, growth, and maintenance of generational wealth.
So let's talk about 2025, okay, and the real estate trends that we're actually seeing. Let's talk about it from the standpoint of where we are right now for 2020. One of the biggest things that we want to look at is looking at the economic factors that impact our real estate game. And our real estate game is, like I mentioned, whether you are just a regular individual who you're not looking to build a real estate empire, you're not looking to build a team and all of this stuff. You are looking for your own wealth building portfolio. That's all you're looking for. You may think that these economic factors do not affect you, but it does, right? And interest rates are expected to stabilize, or like Paul mentioned, may go down because of the slowing of the economy, but we have to see, we have to track it, right? You need to be able to know what that means for home buying, right? Right now, they're saying that it's really stabilizing, but because of the unpredictability of it, home buying there have not been a lot of mortgage applications thus far. And we just started the year, but that's what they're reporting right now, right? So inflation rates have slightly decreased and creating more favorable environments. But the real estate role in wealth building, that's what we are. The name of our company is Generational Wealth Zone, for God's sake, right? So we're all about wealth building, right? So the biggest thing that we need to pay attention to is how much real estate and what areas of real estate are you actually going to be investing in? Okay. You need to be able to track what your niche and strategy and market is going to be. The only way that you can do that is to know markets. Okay, you need to know this. This is very important. Okay, and then looking at the market and where we're trending to go, you may want to look at rental income from cash flowing properties, and you may want to look at strategic investing, which is our turnkey investing, fractional real estate, and also looking at some of the tax liens or paper type strategies, whatever paper alternative real estate strategies that there are, you might want to look at that. Crypto, not so much. Okay. A lot of people who are gauging on the Bitcoin and what Musk and all these people are going to be doing. If you don't know what you're doing, you should not be in that market. That's not a good play for you. Okay. Because the only thing that has been stable across the board has always been real estate. So unless you're going to be buying tokenized real estate, right? So some Bitcoin that buy real estate with some titles behind it, then I would probably tell you that you might want to do a play with land. You might want to do a play with the rentals, and you may want to do a play with private lending. If you have money, you want to lend to people, and you may want to do that play with turnkey real estate, right? A lot of times, a lot of people don't want to focus on real estate, turnkey real estate, because they think it's too high. Let me tell you, a lot of the members in our RIA right now have turnkey real estate. Some of them still have their property. Some were able to sell it for a profit to get into other markets. Turnkey is a great play because it's boots on ground and it does everything for you. And if you want to get your hands dirty, by all means, build your own team. If you want to build your own team and get your hands dirty and stuff like that, by all means, do. I'm a turnkey person. That's what I'm training my investor agents to focus on. That's what the whole academy is, to get you a fulfillment team that you can do nationwide real estate and get commissions on it. And also for my investors who want to invest outside the New York or whatever local market you're in, to focus on turnkey real estate, because we know the numbers, it makes sense, and that's a good play over the short and the long term. When I say short term, it's about 5 years. Okay. So that is what we need to be looking at. Now, that's what we've been seeing. You have to look at this for your own wealth building strategy, but this is what we've been seeing. Wholesales and flips, absolutely not in this space that we're looking at. Might be for you, but it's not for this space that we're looking at.
Generational Wealth Zone is the leading resource center for driven female entrepreneurs. Join our supportive community and benefit from expert consulting and a mastermind group of like-minded winners. The future successful professional has a business coach, and the future is here, period. EnjoyYourLegacy.com.
Okay. Also, some national trends. We already talked about the rates, what they're hovering at, but the trend favors long-term investors using financing for rental properties and other creative deals. So you got to get your money, okay? You got to get your credit right. So I know you hear us talking about personal credit and business credit. It's a reason for that, okay? You can't skip the process because some people already have a nest egg. They might have $500,000 sitting in their 401ks that they can now parlay into real estate. You maybe can't do that. So you can't be your own bank yet. My goal in 2025 and 2026 is to make the most accredited investors that I can. The only way that I know how to do that is for you to follow the right steps. Right? So we have some people on this line right now who I know who are already accredited. They know that they are now marketed to by all the different crowdfunding sources, private funding sources, or whatever the case may be, because they are accredited. You are missing, if you're not accredited, that means that you're missing out on some opportunities. So you got to get your finances in order. You have to get your credit right, and you have to parlay into business credit. That's the only way that you're going to be able to play from these next 4 years, because you have to operate like a business, because that's who they're going to be focused on. Okay. The migration patterns you have to pay attention to. You have to pay attention to states like Texas, Florida, and North Carolina. We're doing big plays. We already have a team deployed in Dallas. We are opening up Houston this year. We are also opening up Mississippi this year. We are in we are in Memphis, opening up Nashville this year. And North Carolina, we have already been in Charlotte. And so we are probably in the tail end of Charlotte right now as a secondary market. You need to find your market, right? Because investors can capitalize on high rental demands in suburban areas and urban areas, but you got to know what your strategy, niche, and market is, right? And that's why we keep talking about that. That's why RIA NYC is dedicated to bring the latest trends so that you bring your questions so that we can help you analyze it. We can't tell you what to do with your strategy or money or anything like that. We can just give you what we're seeing and then let you make your best educated decision. Okay. Rental market growth, what we're seeing, and this is rising housing costs, is pushed individuals towards renting, right? Which is now increasing demand for single family and multifamily rentals. So if you are now in the landlording space, you may now be in position. If you are a realtor who are representing investors in the single family and multifamily space, you are now positioned to educate them on this rental growth that we're actually experiencing. And also short-term rental markets and vacation hotspots are also good. So your Airbnb is where you can do them, right? Vacation rentals are always good. A lot of people are using pad split. I'm not a big fan of pad split because after you do your vetting, things of that sort, there are certain things that it's on you to do. And it's certain things that they do as far as the management and all that, but it's too much that is on you to do. The model seems great, but there's a lot of things that you have to do on your own that I'm not a big fan of. We will be bringing Pad Split on to talk about their model, about that, but I just want to put that out there for you. If you are doing the Pad Split model, make sure you understand that model is not just a model of just splitting up your homes in the room. If you're splitting up your rooms and things of that, because Pad Split is a concept, but it's also the name of a company, right? So you want to know the concept of a Pad Split, but it's also know that's the name of a company. Just like fractional real estate is an actual strategy, it's fractional real estate, co-ownership, but it's also a name of a company, right? So you just want, you're doing your research, you just want to make sure that you are researching the Pad Split concept and not necessarily the Pad Split, the company, okay? Pad Split, the company just took the model of Pad Split and they're doing that. That might be something that you might want to do. And because we're not really doing SROs, in New York, but there's a lot of people who are doing a lot of residential rentals. Like when I say residential rentals, I mean like the group home model, right? And stuff like that. So you might want to look at different things and different trends, but you also want to make sure you do your research on these things as well. Okay. Opportunities in local markets. Looking at the urban revitalization in areas like Cleveland still, I know some people on this line, like Wanda and some other people have investments, heavy investments in Cleveland and other markets as well. And you might want to make sure you're looking at different places, and you could talk to Paul about what should you be looking at, especially when it comes to the revitalization of these areas and the rezoning and what you need to look for in the buildings department for improvements and things of that sort. Latoya will be probably talking about some of this stuff in tax liens, because dealing with taxes and purchasing the taxes in some of these areas, that might affect whether or not you get that lien or that deed in that individual area, because you see the prospect of, oh my God, I paid $5,000 for this tax lien, but if they don't redeem, I actually now have the opportunity to like sell this piece of land for $50,000 on that $5,000 investment, because you know what's coming, like revitalization and stuff like that. Also looking at the suburban expansion for analyzing the school districts and people moving out, knowing where to look for the crime rates, who want to live in these areas and stuff like that. Realtors can't tell you this, right? We're prevented from telling you this, right? We can provide you with the information, but you have to do your own due diligence as to looking at school districts. So you can't say, what's a good area? What's a good market? Is this a good place to raise my kids, or whatever the case may be? We can get in trouble as a real estate broker or an agent for answering those type of questions, but giving you the report based on what it is that you're going to do, that's your report. And you can look at it and you can do your own due diligence and you can take the information from there.
When life gives you lemons, draft a business plan, call your girls, and build an empire of lemon-inspired beverages. Because a real investor understands that in these times, you have to have more than one gig. It's not simply lemonade anymore, boss ladies. Nothing happens until you decide to change your life. But when you do, make more than just lemonade. Oh, and do it in great company. Call us today and build your empire.
And then you also want to look at the investment hotspots in certain areas, right? So you have high rental demand. Like I'm going to be talking and teaching the Moneyball system that we teach in our Turnkey model. We'll be releasing that because next month is business credit. It's all about business credit next month. So make sure you're on the meetings next month. But we're also going to be diving into the Turnkey and the Moneyball system, how you analyze the market for turnkey real estate. So we're going to be doing that as well. So look at some of the secondary markets that I mentioned before, the Charlotte, the Nashville, Orlando, and Oklahoma City, I think, right, is still a good market, but it's up there in price, depending on what you want to pay in the market. But it's still a good market to look at. Indianapolis is still a good market to look at, but you still want to do your own research to figure out what it is that you want to look at, and then paying attention to the shifting markets, right? So focus on long-term buy and hold investments where you can, right? If you are an investor, if you like a buy and hold investor, right? I'm a paper investor, right? So I don't want any properties. I don't want to hold anything, right? But for those who do, that's what you want to look at. So you want to build wealth steadily in cash flowing properties. You want to invest in the markets that have a strong job growth and population stability. And you want to, where you can, you want to look at creative financing strategies, right? You want to leverage seller financing, which is I love seller financing, love seller financing, right? I don't want to use my own money. I don't want to use my own credit. I would love to use the strategy of seller owner finance, right? Subject to, yes, land trust, because that's the owner finance strategy, but lease options, stuff like that. Anything where you're not utilizing traditional loans, right? And then looking, if you're in an area like California, right? New York, Connecticut, while there are some pockets in Connecticut that's good, but markets that are, the price points look like phone numbers, like they're very high, right? You want to look at out-of-state markets, right? But to look at out-of-state markets, how are you going to build an out-of-state team? That's why we do the turnkey done for you model in areas that we do. right? For realtors who actually want to now, you want to build a whole thriving business, we're going to show you how to build a done-for-you model so that you, as a broker or without an agent, because you got to be a broker to actually pull it off, but you can work in that area for a broker and implement and roll out your own done-for-you model. That's what we're teaching in the Investor Agent Academy, right? And it's only $97 a month. So let me just get that out the way. That ain't a whole lot of money. Okay. But those are some of the things that we're going to be talking about, because out of state is where it's at. If you're still trying to work in the New York market and all that kind of stuff, then, you know, you're going to see, or you might go more upstate, or you might be in Binghamton or Rochester or whatever, Buffalo, those areas, but you're not probably going to be able to work downstate because just the numbers and what they're doing into the city may not be feasible for a lot of people. Okay. Going back, turnkey single family rentals, I beat that to death. So it's ideal for those investors looking to enter new markets without operational headaches. Okay. If I am going to be doing buy and hold again, it's absolutely going to be turnkey. I'll buy a turnkey and turn that into a lease option deal so I can get rid of it faster. But I'm not trying to renovate, rehab. I'm not trying to do any of that. That's too much work. So turnkey is where it's at. Fractional real estate, obviously shared ownership on the fractional platform and beyond, because there's other fractional opportunities outside of the fractional community that we have our community on. But understanding that shared opportunities in high value properties is an opportunity. You have people on here like the Carltons and Wanda and Stanley and Valerie, some of our RIA members who actually have multiple deals on the fractional platform. And you can speak to them about their opportunities, and they might have opportunities for you to come be a part of what they're doing. There's always opportunities for you to actually grow. And then, of course, looking at the tax lien and tax deeds through 2025 through 2029, you absolutely want to be looking at alternative paper space because they might be opportunities for you. So looking at tax liens and deeds definitely requires due diligence, but it also delivers significant returns for those people who are in that space. So those are the opportunities that I'm going to tell you that I think you should be looking at in the 2025 arena: turnkey, fractional, and tax liens and tax deeds. And understanding where you are in your finances. If you have a old 401k, talking to us how you can roll that over, getting with one of our benefit providers with National RIA to help you do that. We have CAMA plan that you can roll over. We got a lot of things that we can help you. You just have to have the conversation on how to do that. So as a recap, national and local trends create new opportunities for you as investors. You want to focus on long-term cash flowing strategies to help you build wealth. And you also want to leverage creative financing and emerging opportunities like turnkey rentals, tax liens and deeds, and fractional real estate. So those are the recap strategies that we're seeing, right? And that's because of our vetting and what we've done. But this is by no means just for you. You have to know what is your strategy for your market and for what you want to deploy in the next 1 year, 3 year, 5 years out, right? If your entity is not set up properly, we might want to look at that. And we might want to make sure we get an entity compliant entity to make sure that it's set up to get funding, to get partners, make sure that if they do this CTA, such that you're able to pull that together. Who's going to help you file it? You're going to do it yourself, which you can. You're going to go to Lorraine to help you do it. All these things you need to start having conversations in your head. And if you have a spouse around the dinner table, which I call your wealth table, right? You always have to have a conversation with your significant others, your potential partners every week, accountability partners, whatever, so that you can hash all this stuff out, get it out your head so that you can declare it so that people can hold you accountable. So with that, thank you guys for coming on to this forecast meeting.
This has been Fiscally Fabulous with Dr. Teresa R. Martin, Esquire. If you would like to learn more on how you can build generational wealth and leave a lasting legacy, go to www.enjoyyourlegacy.com and be sure to subscribe. Thank you for listening. Until next time.